What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Labs. It is May 11th, 2021, the start of another great week in these markets. As you know, in our live market analysis session, we want to bring you all of the charts that you need to keep your eyes on. We want to tell you how you need to break it down, how you should trade it, what levels you should look for, and how you can be profitable throughout the entire week. If you don't know, I'm half of the Bison Trading Show crew. I go by the name of Ty Trades Futures. And of course, I'm here with my guy.
You already know who it is. It's your boy. I'm the D guy, aka Pearl Financial. I hope you guys have your notebooks, you have your pens, and ready to get these levels to have a great week. Now, understand, you have to pay attention, take your notes, because come Friday, we're going to put the stuff to the test. So, with that said, we're going to just jump right on in.
All right. So let's go ahead and get this analysis session started. Today, I want to go over a few pairs for you. I want to primarily go over US 30, aka the Dow Jones, and then I want to touch on Deutsche Coin a little bit. It's been a lot of big moves on that, so it's going to be a lot of information presented. And also, we have some interesting things. You know, we have our exploration into the financial world segment that we have coming up. We have some good information that we want to talk to you about tonight in terms of not just mutual funds, but ETFs in particular. And of course, we have Darren doing two pairs as well. So tonight is an action-packed show, a lot of information. So let's get started. So let's kick it off with our first pair, the Dow Jones, aka US 30. Now, as we have been going over in all of our previous sessions throughout time, the Dow Jones has been in an extended uptrend, not only since it came out back in the 1800s, but primarily more so since the beginning, back in beginning of this, I guess you could say, this new bull market that started around March during the pandemic last year. Ever since that point, we've been making higher highs and higher lows continuously across this chart. And I would say last week we could say that everything was continuing the way that it should, but this week I can't tell you that. I can't tell you the same thing because we're actually in the process of forming a bearish engulfing candle, and this is on the weekly chart. So it's not formed completely yet. If we measure where we're at right now to where we need to be, we're about 366 points or 1%. Now, if you know the Dow Jones, 1%, that's nothing. That can happen overnight if things are bad enough. Because lately we have been in a pullback scenario. Now, this should come as no surprise to you guys because we always tell you that when the market moves, especially equities, equity indexes in particular, whenever you make a move up to new all-time highs, expect a pullback. So we have made moves up to new all-time highs. We were actually able to touch 35,000 for the first time in history. So that's very important and very critical. Now, as soon as we hit that all-time high, look at what happened. We pulled back something serious. Now, when we zoom in, we can see exactly how extreme this pullback was. Let's actually get a little measurement going on from the top of it to where we're at right now. Almost 1,000 points within the span of 2 days. So that just tells you how strong this down movement and this pullback has been for right now. So in order to really just play the market the way that we should, we have to analyze what we see. We know that the overall trend is long, but right now, because we're seeing lower lows and lower highs, we have to respect what the market is doing. So based on that, I don't necessarily want to say short, and here's my reason why. Let me pull up my support and resistance lines. If you notice, these are the same zones that we had on the chart from about 2 weeks ago. Now, when we initially drew these zones, prices ran away from them. But as prices usually do, they have come back to levels that were important before. Now, what I want you guys to really take note of is this wick right here from May 5th at 10 o'clock. Notice how prices came back down to this level, touched it off the T, perfectly off the zone, and from that point forward, the uptrend continued. Whenever you see a touch like that in a zone like this, that tells you that that right there is a very important level. So then, in the future, you can always know that more than likely this level at what price is this? 34,050 is probably going to be important. So that brings us to where we are currently right now. Look at where prices came down to in this overall down movement, right? After all of this selling pressure, where did it hold up? Where did it find support? Right back here at the same level from before at 34,050. So that's why these levels are so important to you guys, right? So right now, long term, I'm looking for a bounce to the upside. But like I always tell you, you don't want to just go long because prices come into a certain price level. You want to see prices come down into this level, get a bounce off of it, and then make a higher low. So far, we have had the bounce off of the zone at 34,050. We bounced up, but we have yet to make a higher low just quite yet. Now, a higher low for all my new viewers, a higher low simply means that when prices pull back, they pull back to a point that was higher than the original area that they started from. So if this right here at 34,050 is the original starting point, we would need prices to close above those prices, above those areas in order for it to be considered a higher low. So we haven't established that just quite yet. We still have a little bit more room to go. So until we see that, we really can't be too focused and too caught up on the long side. So I wouldn't necessarily tell you guys to short just because I know how strong the movement in the Dow Jones is, and I know the uptrend can continue at any time. But if you were to short right now, I wouldn't be mad at you because we probably definitely have a little bit more room to run. If anything, I think we could probably come back down to this overall level at 33,800 because I know we talked about this a long time ago, like way back in April. But before all of this right here happened, this most recent up move, before that happened, we were stuck in this zone for a very, very long time. So it wouldn't be surprising to me if we came back, tested the bottom of that zone one last time, and then the uptrend continued. So for me right now, that's really what I'm looking for when it comes to US 30. But the good thing about having a team on here to talk to you is that you get multiple perspectives and multiple different views about how the market can move. So let's pass it to Darren and let's get his thoughts on US 30 and let's see what he forecasts for this pair to happen in the future.
All right, so definitely take away the volume, add my moving averages. So just how we say, we always start at the highest time frame because we want the biggest picture to see the overall direction. The reason for that is when we drop down lower into the lower time frames, we don't have a problem on deciding which direction we're going because we looked at this market on the biggest time frame and see the biggest picture to where really when the lower time frames are just entries and exits. So with that being said, we just have higher highs. The 20 is above the 50. Still bullish activity. There's really nothing that's kind of showing that the selling is going down. Drop down to the daily for me. Same thing. We have that wick. The only difference now is I don't think we really had that. Did we have this wick last time? Did this wick form last? This was this Thursday, so 2 days ago. 1, 2. That was that candle. So on that day, that candle was not closed, and actually, this is the of what happened after all of that happened. So this showed that a strong bullpen or an upside down hammer, I would say. The only reason I kind of wouldn't say it's a hammer because it's sticking out a little bit at the bottom, but it's not a lot. If it was just no wick at the bottom, I'll be like, yes, that is a upside down hammer. That's let us know that is a reversal signal. But let's just kind of trade what we see and not kind of what we think or guess. So the market actually came all the way back down, hit the 20 moving average. Look where it's sitting at right now. If you kind of draw that line over to the left, that was probably once a high before all of this happened. So let's take that in consideration. We're at a previous high area, so this could be a duality level. And like me and Tiberius always said, anytime a market comes into a duality level, we can expect the market to make some type of move, whether it's up or down. But could be a crucial move on what happens next in the market. So with that said, the weekly and daily, we should only probably be looking for up moves. Let's just pop over to the monthly right quick. And I say the monthly because I just want to make sure that what I'm thinking is correct. So, 7 is above it. That formed a hammer, but like I said, it doesn't really form. It's not really a hammer because it's sticking out at the bottom and it's green. So if that's an undecided candle, quote unquote, anytime an undecided candle forms, the previous bulls or bears are in control still right now. So if it's neutral, whoever was in control before is now in control. So it's probably safe to say that the bulls are still in control. So let's pop back down to the daily. So we should, by the time we get to the daily, we should only be we figured out which direction we're going. We're looking for buys or sells. So right now we are looking, for me at least right now, I'll be looking for a buy right now. And the reason I say that is because even though it had such a strong movement down, that down movement was possibly needed in order to continue to go up. And I feel like the down move would have been too late for us to hop into now. The ride is kind of over. They're kind of at the bottom, so to say. Like if you were top of a roller coaster, they're already at the bottom already. So it's like, do you really want to hop in on a sell after like the biggest drop? So let's kind of just drop down to the 4 hour and let's really dig in and see where exactly we are in the market. So like we said, we're kind of looking for buys right now, but we're really just trying to understand why the market fell so low. So it's probably, we can say the market fell down so low is because, quote unquote, if the market does decide to go up, it has to come back down to retest previous highs um, that it broken out of, so to say. So if you kind of look over to the last kind of highs the market's broken coming back down. So go back to the where we are, where we at the top of that candle, at the red. Nope, all the way at the top. Yep. So now follow that one. So first I want to say, come, you see that little left high to the left, like right there? Right there. So to me, that was a previous high. So the market clearly broke that structure. Didn't really have too much momentum to come back to retest it. So that's how strong the momentum was. So it came all the way down. Now stop right there. Now kind of follow over to the left. So I want to, yeah, so that high next was broken. But as you can see, at that level, a green candle was there forming, letting us know that was a retracement candle. We follow that over. That is the last so high that was there before all of this happened. So that we got broken structure again. So now we can follow it all the way back down. Keep going. Stop. Once we come to that level right there, not only we stop there because the 50 is there, because of the 50 is there, because we know that the market plays close to these moving averages. And I think in plenty of scenarios that I told you, anytime the market is kind of far, far away from the 65, where this, in this case, the 20 wasn't playing the market so close on this one, but the market had to come back down and touch the 65. So being in the market came down, touched the 65, that level lines up with previous highs. So actually follow that over. Yep. And even go all the way over. Right, it even hits that high right there. So that let us know that this area is an important area, another duality level. So pretty much to me, I felt like since we got a break of 1, 2, almost 3 highs or previous highs, um, two things. I would need just a little bit more confirmation for me to go up, because like Tiberius said, we possibly could have a little bit more room to run. If it breaks this high level right here, we would have to then go find another high area. So go back over, slide back over to the right. Yep. So now, say if the market broke those highs, now come down to another high right there. So we are actually sitting right there on that high right there. So, and then after that one come down, right there is the next area that we should see some struggle. So between that area, and bring it down one more time, in that area right there, these areas, those two areas, what prices are those? So that bottom price is what? Kind of go to the bodies. Don't really go to the wicks so much. Even though the wicks are really important, but in this case, go to the bodies. What price is that?
That's around 800, 33,800.
33,800. And then what's the top of it, which was the last kind of high? Go back up to the top. Yep, to that. Yep, I think like right there. So that's 3405. 3405.
Yep.
So Unhide your moving averages. So this is actually perfect. The zones that we drew before are areas that we kind of knew, so quote unquote, that that the market was going to come down to. So now we're just pretty much patiently waiting for it to come down and hit the next purple zone. If it stays above that purple zone, then we can. It's safe to say we can go ahead and make this the buy move. But if the market continues and kind of fills in those orders that was placed, that long wick, to me, I kind of consider that orders that was placed that was never kind of really filled. And when I say filled, kind of like past it or whatever, kind of it went to that price and didn't really close near it. So I think it's just really going to try to either fill all those areas down to the tip and just come down, pause, and come down to the purple line. And if it breaks that area right there, I would have to look for a retest on this one. I would possibly need another retest, or if it doesn't retest, I would keep my tight my tight. Hello, we having some technical difficulties. Bear with us. Bear with us. We having some technical difficulties. Yo, yo, I know you there.
Yep.
You back?
Yeah. You was breaking up. Yeah, you was breaking up a little bit.
You was breaking up. Yo, Wi-Fi. So pretty much, we're looking for the market to come. And actually, to me, I like if you move. So move that. Say for instance, you move that purple zone, that second purple zone up just a little bit. Just a little bit. Okay, right there. So if that kind of happened and it stays above where we're at right now, I would look for a buy. But I will begin to look for a buy because honestly, I would need those highs to be broken back above back to those left before I hop in for the buy. But like I said, if I was to hop in for a sell, I would need it to break that second zone, retest. If not a retest, probably a break of structure to the left, and I'm taking it back down to the 33,800 for my take profit. So, with that being said, these are the levels that I said. I said 33,800 would have been our TP. 34,050. That was a high area. We said that we were waiting for the market to break to possibly go back down, bring the support and resistance back up again. And then 34,500. Well, I passed that already. No, in fact, I think that was for you. I think that was for your pair. I think. I don't know. That was too high. So those pretty much are two levels I'm looking at: the 33,800 and the 34,050. Also, being that we it passed through the highs just now, possibly it could be retesting right now. So if I was to hop in for a sell, I would possibly try to hop in at the wicks, at the top of the wicks at the 65, and then try to come back down. Because you always want to buy low, sell high. So go to the 5 minute. Yeah, so I would try to need it. To me, it already kind of looks like it broken through the purple zone, came up, retest the purple zone, and now we just heading down. So now with that said, I would try to buy low, sell high. So I would try to either get it back off of the 34,200, off of the zone, or off of the 20 moving average, which is coming to right now. So what price is the zone, the bottom of the zone?
About 34,200.
In the top of the zone?
About 215.
Okay. And then the price at the 65 moving average. I mean the 50.
225.
So those possibly some more areas. So 34,225, 34,215, 34,200. Yeah, and then try to take it to 34,000. Excuse me, 33,800. Or just take it back down to the next purple zone for your first take profit. How many pips is that from the 50 moving average or the top of the zone to the next back down to the purple zone? I would take that. Is that a lot or a little bit?
That's a lot.
So I would definitely take that. So I'll be looking for the market to come back up, retest that, and then come back down. So those are my prices I was looking at, or areas. Do I have anything else to say? Go to the 15. Yeah, nah. Matter of fact, no, nah. That's pushing it. I was gonna say Head and Shoulders, but I was like, no, there's no way that's a Head and Shoulders. I see it all the time. So yeah, but honestly, I don't see it coming up, passing up through the purple zone for a retest. I see it just coming to the top of the purple zone, middle or the bottom, and then coming back down. If it does break up back through the purple zone, then that means it's on its way up. So pretty much this purple zone is the key. If it stays below it, we're going for a sell. If it goes up, break above it, it's going to be going up. But remember, if it goes up and we're looking for a buy, you need it to come when it goes up, you need it for the retest to come back down to hit it, respect that level, and then go up. Because it can go up, possibly break up through the purple zone, and then come down and close below the purple zone, and then go all the way down and psych you out like that. So it'll be just the wick up out of the zone hitting the moving averages, and then the body will come down and close below the purple zone. So you should have been patient and waited for the close of the candle instead of just being so fast. So definitely take heed of that, but that's pretty much my analysis.
All right. So there you have it, good people. That right there is our Tuesday night analysis for US 30. So make sure you use these levels that we talked about throughout tonight and tomorrow to maybe play some good trades, and anything well that you can find in the market. Make sure you drop it in the chat and DM us so we can put it on the show for Thursday and highlight your trades. So that brings us to the next pair that we want to go over today, which I'm sure a lot of you guys know about and have heard about. It's been moving a whole lot this weekend, and that right there is Deutsche Coin. So let's just look at this from a bigger picture perspective. We want to do our top-down analysis. So let's start at the weekly chart. Now, based on the weekly chart, I know we see a lot of wicks here, but let's break this down and dissect what's really happening. Let's start from down here. So everything before January 18th this year was pretty much just a whole lot of nothingness, just back and forth, back and forth. And then it really started taking off around the end of January. We had our first initial move up. We trended sideways for a long time, big consolidation period. And then boom, around April, we really started moving. And this is when we started analyzing Dogecoin for you guys. So we saw that we had the huge push up. Now, last week when we saw this huge push up, we have been telling you guys that markets always follow market structure. Well, not always, but 9 times out of 10, they follow market structure. So in an uptrend, market structure follows these rules. You usually see pullbacks that come back to test the last highs, previous highs that were already established on a chart. So if we look to the left, we can see that those previous highs that were established were somewhere around here, around the 43 cents to 40 cents level, anywhere in between that range. Now, look at what happened over this past week, or actually over these past 2 weeks. We hit an all-time high of 73 cents, and we pulled all the way back, right back down to these wicks. We hit those wicks, and then we bounced up off of them. So you can see that happening on the weekly. And when we break it down to the daily, you can actually get a much better picture and see how perfectly market structure played out. Look at that right there. That's a perfect test. Not only once, but 2 times. So if you would have took heed to our analysis and actually put some buy orders in down there at these previous wicks, you would have been able to initially catch a 34% move if you would have took your profits up here at this point, because look at how this wick popped all the way down here. If you understand candlesticks, you know that it closed up here at least for this one day. So you have the chance to make 34%, which is a phenomenal. People wish to get 34%. Retest these highs, retest previous highs. All we have to do.
Well,
Hello?
you going in and out, bro. Your Wi-Fi kind of breaking out. Hello? Yo.
I don't know. Yeah, I think that might be you, bro. My chart's working.
Nah, my joint is I'm sitting right here. I'm not doing nothing. My joint is at all bars.
All right. So we see these prices come back and hit these levels, right? We bounced off of them and we moved up. So we see the market doing what it's supposed to do in an uptrend. It's following market structure. So now all we have to do is look for places where we can go into this market and find good buying opportunities. So when we break it down to the hourly chart, we really don't have any major bull signals quite yet. We have a double bottom that's formed. That's a very good thing. Now, all we need to see is a higher low get formed off of these double bottoms. And as a matter of fact, we actually have that right now. So let's pull up the line chart so we can see it a little bit better. This right here represents the double bottom. The first touch was on May 9th, 8 o'clock. Second touch was on May 10th at 3 o'clock. Now, ever since that point, we've moved higher and we have made higher lows. But in my opinion, I don't think these higher lows are really significant enough to go long. In my opinion, until we break above 55 at this little wick right here, it's really not too much emphasis on the bull side quite yet. We can't confirm it. If we were to go long at this point, it would just be speculation. We always want to wait for confirmation, not speculation. So I think as long as prices break above 50, and they respect this double bottom that we have forming, we should be good. But also, on the flip side, you have to take into account what's happened since we hit these all-time highs. We had a huge bear flag back down to the downside. We pulled back up, retested these bodies, but we have yet to retest the wicks. So in my opinion, that would be the area that we need to look out for. So these wicks are located at 52. So anywhere between 52 and 55, if we can break above that area, we should be able to see higher prices in the future, as long as we see a continuous pattern of higher highs and higher lows. Until you see that, though, you got to be a little bit patient with Deutsche Coin, because if you get in at the wrong time, you guys see what can happen. Imagine if you got in anywhere up here. You would have been in a major loss, a 40% loss. That's rough. That's real rough, especially if you trade it with leverage. That might blow your account right there. So overall for Deutsche Coin, I'm still biased to the long side. I'm waiting until we see those higher highs and higher lows and a break above 55 cents. And from that point forward, I think you guys should be good to buy some more of it. And I would say probably take it back up to the all-time high. I don't know if it could go past that point, but it'll definitely come back and retest either the bodies or the wicks if we get past that 55 level. So Darren, what's your thoughts on this pair right here?
I don't know. I just pretty much feel it moved exactly the way I said it was going to move. It literally came all the way down to those highs in which I said. So with that said, until higher highs and higher lows begins to form, break higher of the green candle. Let's just say the red body instead of the green candle. before I'll hop in. So right around, so go to the top of the red candle. That's right next to the green one. 57. So you say 55. I'm gonna say 57, and I say that just because I kind of don't like that wick to the left of it. Um, when in terms of breaking, I rather it break a body than a wick, just because I feel like it can probably come to the top of that green wick and then reject at the top of it and then come down. So I want the break of the red one instead of the green one, because that top green wick could actually be a double test to continue back down, to possibly double test the lows that it just hit. So if it breaks 57, I'm all in. So let's just actually go to the weekly real quick. Even though I know it's still kind of new and there's not much showing. Um, go down to the 4 hour and unhide my moving averages and put up the signals and everything. So um, yeah. So I would actually kind of be still in it for the sell right now, just until we get to a little bit lower prices so we can hop in for the buy. So I'm actually seeing it staying below this 20 moving average. Um, it's probably just going to play right around on it, and then it's going to go down just because the formation of that red wick that's hitting right off of the 20 moving average. That kind of tells me something. Anytime something hits, like Tiberius said, anytime that a wick hits something directly to the T, you gotta have to pay attention to it. So, what's the prices to the top? Go over to the 19th, and what's the top? What's the price at that high over here? Go over to the 19th. Of May, or excuse me, not May. Go back in time, right there. So what's that price right there?
That's 44.
44. So possibly coming back down to 44 to retest the lows down there, and then that'll be our time to come back up. Um, go to the 5 minute because I want to kind of see how low is low and how high is high. So yeah, with this one, zoom into where we are right now. Just the way that wick just formed right there, that kind of lets me know either one or two things: that either we're right now about to go into a crazy sell, or we're about to go into a crazy up. So and for the most part, I would be more on the side of the buy still, just because we're still in an overall uptrend. We're just currently going against the market trend. So um, I just pretty much want to see what it does next in a couple more candles. But until 57 and 55 is broken, I can't look for buys. Until then, I'm all in for the sell. So that's my analysis.
All right, so that wraps it up for Deutsche Coin and US 30 on our side. So let's pass it over to Darren. He has a couple of pairs he wants to break down for you guys too. So we'll get into that part right now.
Alrighty, can everyone see my screen? No. Alright, can everyone see my screen now?
Yep.
Alright, so the first pair that I kind of want to go over is gold. Excuse me. Gold is one of those pairs that you need to have money to trade, but with any big contribution to losing is big. Big. What's the term? Big risk, big reward. So this is one of those case scenarios. So I think before we drew this blue zone, because we kind of said this was kind of going to be an area we were looking for the market to come back down and possibly continue back up again. And look where it came back down to. It came back down to that blue zone perfectly. And I feel like this could be probably our second or third leg for lower lows and lower highs. So with this, ever since this kind of formed up here, We never had enough momentum to come back up here to retest this level. Ever since then, it's been making lower lows and low. So this was the first lower low, and this was the first lower high. This is the second lower low. And this could possibly be the second lower high. Until it breaks this structure over to the left, where this red zone is at, is when we can possibly begin to think about setting up for the buys. But until then, we would have to kind of follow the so-called trend right now. The 7 is above the 65. We haven't really made higher highs and higher lows. It actually just came back up here to possibly just retest. This wick was just such a big, crazy candle that it just pushed up and then it just fell ever since it came back down. And it is now actually over here by this low over here to the left. So let's actually drop down to the weekly. So let's just be very, very clear. The overall trend is still up. The overall trend is still up. We're just currently going against the market trend. It hasn't broken up above these prices at 2,000. So until that happens, we would have to follow suit on this on consolidation. So let's drop down to the daily. So wait first. So the 7 is above this. Let me make sure it's the 7 is above the 65 on the monthly, but the 7 is above the 65 on the weekly. And the 7 looks like it's trying to cross below the 65. Oh no, it's actually still above the 65. So I think as far as the down move, once it came down to this blue zone, I would kind of say this was the quote-unquote end of that down move. So now I think with this double top, we can just now begin to just look for buys. So I'm gonna, but I feel like even though I'm looking for a buy, let me see. I just feel like I said, I can't look for a buy until up here is broken. So I would have to stay with the sell. I mean, I don't want to confuse anyone. I want to make sure I'm saying that clearly. The monthly, weekly, and daily, the 7 is above the 65. But it hasn't been making higher highs and higher lows. So when those kind of, and actually that's the first time. Wait, let me make sure I'm looking at this correctly. Okay, so looks here, we've been just making higher highs and higher lows. The 7 is above the 60. Okay, same thing. Market came back up. It had a crazy retest. It kind of actually just retested just this high over here. If it stays over to this high right here, it has to now continue up. So yes. Being that the market came back down to that duality level over here to the left, I would have to stay on the side of the buy for this one. Even though this is over here has been crazy over here. It's just been going down so much. But being that it came down to this blue zone so perfectly, I think, yeah, we got a break of this high over here and this one. That now I think I'm just looking for just to come back down currently temporarily to make to a retest to a duality level and then pretty much just continue up. So let's be clear now. Let's hop down to the bottom. That we're just pretty much looking for prices to come back down to lower areas before we decide to hop back in. So it would either be this green candle over here, the price at 1815.75. It can either come back down and stay above and go up, or it's going to come back down to 1800 flat. So those are the two areas I think it can possibly just come down to and then continue up. And pretty much on this side over here, these little areas are pretty much areas I'm looking for the market to break and go above. So being that it broke this one first, it's looking to break this one next. If this one stays above where we are right now, this would have to be the next area we're looking to come back to before the market decides to do anything else. So I think as far as it going up, this red zone would possibly just be my first TP for right now. Once it gets here, I'm pretty much out. Let's drop down to the 4 hour. Let's do a 2 hour. So yeah, so we're looking for it to come back down to this blue line first. And if it respects this blue line, then we'll just go up. But if it breaks this blue line, this is the next level we're going to, the 1815.75. If it comes down here, respects it, then that could possibly be the move up. But ultimately down here is where most buyers will want to hop in at, because this is a very, very low level. You're buying low and selling high. And it's coming to a major duality level where it's actually the market has been played around in this area for some time. So I think, to me, this would be the best price at 17. I think I said 18 flat. Yeah, 18 flat, maybe like 17.98 or 99 or something like that. Some around these highs over here would be great levels to go in for the buy, but we would still have to still respect these highs over here as well. So yeah, so first this would be possibly, let me see how much where we are. So if I was to go for a short, I would definitely want to go come up much higher. So it would either be at some of these highs or the 7 moving average. And then the blue box first would be 60% of my account. The next one is 1%. And those highs that we ultimately want is 2% if we got it to come all the way down. So let's look at it. Let's go to the 5-minute and see. Let's see how high is high and how low is low. So look what it pretty much did. It came back up and literally tilted over. So now we have to follow the highs that it formed over here. So the market broke this high over here and it crossed. And this right here could possibly be the letting us know, like, yo, this is definitely the market is going to start making bearish activity. So this is the first high, which is broken. This is the second high. It looks like it's broken. So ultimately, we would have to kind of just follow suit and just continue it going down. And the first blue line, like I said before, would have been our ultimate, well, not ultimate, but our first take profit. So we can get it first to the blue line, the second green zone, and ultimately I think all the way down here to down here at 1800. But yeah, I think that's pretty much it. Let me see if there's anything else I need to say. Possibly this could be the first leg of a higher low, This was a low, and now this is probably a higher low. So let's just see pretty much what it does. So just to recap, we're kind of just looking for the short move for short move to set up for the buy. We pointed out 3 levels, which was the blue line, the first green zone, and the third green zone. So let me just not say the lines, but 13. Did I write it down? No. Let me write this down too. So this is gold. So if we were catching it from up here, the 7 moving average or somewhere around this low over here, the blue line first would be our first take profit. So 1822.75. Second would have been the green zone, which would have been 1817.65. And then ultimately down here to the 1800 flat. But if it respects any one of these zones and stay above them, we would have to continue to go up. So short term, sell. Ultimately, for the bigger picture, we're going to buy. So with that said, let's just pass it to Tiberius and get his thoughts on this one.
All right, so let's start at the daily chart. Can you give me a clean picture Let's look at this chart from its most fundamental perspective. Wow, I didn't see that down move that had been happening since August.
Yeah,
That
that's what
was
I was
what.
saying. That's why it was kind of hard what I was saying. Like, that down move, we can't ignore that. But being that it came down to that double top and it respected that double so good, and it broke that high, that immediate high over to the left, 1775. You like, yo, I think it just hit the bottom, did a double bottom, and now it's on its way up.
Yeah. And it looks like, because if we analyze this overall pullback from August of 2020, like the overall trend has been down, but there have been extended periods of time where the up movement was definitely in play, and it lasts for a few months. Like I think the most recent one comes back to December of 2020, where we had a series of bullish engulfings that pushed the market higher. We had a higher low get formed right there, another higher low get formed. So I think that overall, like we came back to the 1950 level. So that's the pattern that gold likes to move in. And also, this is a similar pattern for most downtrended markets. You'll have an overall downtrend, but in the process, there will be up movements along the way. But all of the up movements are really just the buyers pushing prices higher to a certain resistance level. And once it hits that level, the selling starts back over again and pushes prices lower than they were before. So it seems like right now we're in one of those retracement moments where we have the double bottom that formed in March and April. We have a higher low that formed in late April. And we have another higher low that formed in May right there where D is at. So we're pushing to the upside. So now we just have to identify what's the potential level that this market could reverse from. So if I had to point the first thing out that I see, I would say 1875 because that's pretty much the market structure top for this section that we're in right now. The same way that 1950 was the market structure top for the last uptrend movement that we had before back in December of 2020 and to the beginning of the year. So I think for the most part, we have room to run, but only up until that area. So based on that analysis, longer term, definitely leaning towards the short. But right here, right now, today, I'm looking for the long trade. Now, as D was saying before, more than likely we'll probably see prices either pull back to the blue line. So let's bring up the support and resistance again, because the blue line right there, I think that that price is what 1822.
I think 1822.
Yeah. So in my opinion, like that wick right there could definitely be a level that we could go long from. But if not, because there are some scenarios where the most obvious spot on the chart won't get hit if it already got hit once. So if that level doesn't get hit, I would say it's probably the next wick up after that. Do you see the little small green zone you have over there to the left? That one. If that was to get stretched across, the top of that zone will run right into that wick that I'm talking about now. So let's see. Yep, perfect. You see that wick right there? Where we're at right now?
Yeah.
Now follow that over to the left. Right there.
Yeah.
So this wick right here from the 12 pretty much lines up with that general area. So I think if we were to see a long move, it would probably come from these levels for sure. But if not, remember the selling pressure is still in the market, whether or not we see it or not. So I wouldn't be surprised to see prices come back and test the 1800 level, because those 100 levels, those whole number levels, they're like a magnet in the market. And when you're close enough to them, they kind of snap back, snap to it. So if prices were to start a new downtrend, I would look for 1800. So I would be conservative on gold right now. I'm not really a big gold trader, but if I was to trade it, I would definitely look for anything from 1800 to 1805 and try and go long from those levels.
All right, there you have it. So short term, we're looking for a short move to happen, but for the longer, bigger picture, we're looking for it to correct itself and continue back up again. So with that being said, let's flash over to my last pair for tonight. before we get into our next section, the exploration section, which we decided to go. What we decided to go with?
Today we want to talk about ETFs.
ETFs. I was trying to see if I have that. I had an ETF for the financial ETF.
XLF.
So yeah, you know XLF.
That's one of them. But it's a lot of them. Though.
I think it's S. I think isn't it XL for all of them? So it's like XLT, XLR. Like I don't know, but let's just go over to. So my other pair was AU. AU pretty much did not do what we thought it was going to do. We pretty much, or did it do? Because we were looking for a Head and Shoulders. Where was the Head and Shoulders? Where we looked. So actually, it did exactly what we wanted it to do. It did the double top. No, it actually formed that. I'm trying to see. What was this a formation we were looking to do? Oh, so yeah, it came into that. It came into that shoulder level, which we pointed out, but it respected and came back over to this level here, to this left area, and then it shot all the way back up again. So with that being pretty much it broke these structures as well, I would see it coming back down to these structures here and just continuing up, because with that big old pole that it just formed and this Head and Shoulders that we thought it was kind of formed, kind of similar to what I was going to say over here, that I think it's just going to come down to these highs here, respect itself, and then just continue to go back up. But we would need this high right here to be broken first before we think about going for the long move. But until then, we would have to kind of let the selling play out and let the prices come back a little bit lower before we decide to hop in for the short. So, I mean, excuse me, for the long. So, I think ultimately this is a good price up here. So, yeah, I think that's a good price right there, where I think the market could possibly push into that zone and then pull back up to the top of the zone and then continue up. Or if it breaks down below that zone, I'll be looking for the retest somewhere into that purple zone, and this would be my area to hop in for the short. And I would only take it back down to the next lower level, which is down here, which is at the 77,875, and then I would look for it to go up. But I think really it's going to kind of do what it did down here, which where it came up and then it dropped down like halfway, but only to where area where it had a struggle in the market before. So if we kind of just follow this, we can just kind of look over to the left and see where the market was struggling before, and kind of follow the suit which it has done before, which is come back over to the left over here and then continues up. So being that we're in a strong duality level, I think that this could be an area to go up. But let's go to the top down analysis, because I don't want you guys that analysis came with me looking at this pair for a very, very long time. I was knowing what I was looking for. So let's actually look at it and break it down from the highest time frame and give you my entire thoughts. So ultimately, like we said, I had the monthly zone and the weekly zones, and I was looking for it to come into this monthly zone, break up out of it, and actually get back up to the top where it was before. But until we do that, before we get up there, we actually have to break a lot of highs before we get there. So for right now, the market came down, hit this monthly zone, never had any thought about coming back down to the top down here. It actually came back up, retested a high area, shot back up to these highs here, and now we're in a strong area where every time it comes into that area, it goes down, but it's been making higher highs and higher lows, so that is the only thing kind of really on our side right now. Just because the 7 is below the 65, that's pretty much saying bears are in control, but we're going to drop down to a lower time frame. The 7 is above the 65, so that lets us know right now the market could possibly still could be consolidating. So if it is still consolidating and it's still in a down move, that means that the market has a little bit more room to run to the top of here. So to that top of that high wick there and then come down, or it's going to come to the top of the red zone and then that's be our signal to go down. So we definitely want to be patient on this one. Let's drop down to the daily. So for this one, I would have to kind of be a little bit more patient on this one just because all of them don't really kind of line up. The monthly, the 7 is below the 65, which showing that the bears are in control, aka selling. But being that we got this hit down here and never came nowhere near this ever again, and it's just been making higher highs and higher lows, we have to take that in count as well. So I think currently for the short term, it's kind of like gold for the short term. We're kind of looking for the sell to bring prices low enough for us buyers to want to hop back in again. We've been making higher highs and higher lows, so that means the buyers are somewhere in this. So in the 7 crossed over the 65 in August. So that lets us know that the buyers are still in quote unquote in control. But if we eliminated out or didn't look at the monthly, we would have to say that the buyers are in control and we would be looking for buys. But like I always tell you guys, for every good buy move, we need a sell move. So we want to make sure that we're getting it as low as possible. So I think where we are right now, that strong duality level over to the left. Let me go to the 15. Yeah, so if we can just get prices to come back down or respect this purple zone, I would have to go for the long. But if not, if it breaks down below this purple zone, I would be trying to be looking for a retest, and I would just have to bring it back down to the next lows. So to conclude, I'm saying that right now the market is kind of quote unquote consolidating, and that the overall trend is up because it's made a higher high and higher low. The 7s are above the 65, and we're just pretty much waiting for confirmation. So with that said, I'm gonna pass it over to Ty and get his thoughts.
All right, so let's look at it from a clean perspective on the daily chart. All right, so I know for AU, I've really been keying in on this overall head and shoulders pattern that we see forming now. Because the overall head, we can see that poking out at 80. And then we also have the shoulder levels located at around 78 cents even. Now, what was really interesting to me was the fact that we came all the way back down to the neckline in February for the first time, and then once again in April the second time, but we were never able to break it. Now, when it comes to head and shoulders chart pattern, when the neckline is broken, that validates and confirms that the head and shoulders is in fact valid. But if that neckline is never broken, then the head and shoulders isn't confirmed quite yet. And as a matter of fact, if the neckline doesn't get broken and prices start to move up, the head and shoulders pattern can actually be invalidated if the shoulder level gets broken. So the shoulder level, remember, is at 78 cents. Now look at what we've done over the past few days, maybe the past week or two. We've actually been able to push up from 77 cents even all the way almost up to 79 cents. And that movement right there pushed us past that overall right shoulder area that we were talking about at 78 cents. So that right there invalidates the whole head and shoulders patterns because the right shoulder and the entire shoulder level has been broken. Now, if you look at an area like that, you really want to look for a retest because the right shoulder level was a consolidation resistance level that was holding it up for a long time. That was a lot of supply up there, and prices could not get past that level for anything. They couldn't do it. Now, when they finally were able to break it, now we expect that breakout retest. So whenever prices break past the consolidation zone that's been heavy in the market, you always look for that retest. And that's what we're getting right now. We're seeing the retest come back to 78 cents where that right shoulder level used to be. So now what used to be resistance should double up as support for us, and that should be able to push prices higher. Only thing that concerns me is the wick that happened off of 79. That's not really appealing to me. But as long as we stay above 78 cents, keep closing above it on a daily basis, I think we could be in store for a rocket ride higher, probably back up to 79 cents. And then eventually probably 79.50 and then 80 cents ultimately. So those are the levels that I'm looking for. I'm keying on the 78 cents level. If we stay above it, we're all good for the long. If we break down below it, we'll have to come back on Thursday and reevaluate. But for right now, I'm definitely leaning towards the long side.
All right, so there you have it. We're leaning more towards the long side, and at least I said for me, I'm waiting for prices to come back down. Can you hear me now?
Yep.
Yeah, my fault. There you guys have it. I think I was muted. There you guys have it. Two perspectives. Ty said overall he's going to be looking for the long play, and I think me as well. But at least for me, I'm looking for prices just to come down a little bit lower, and then I'll wait for the complete close of this candle, and then that'll be my move to start making up. So with that said, that is my analysis for AU. So with that said, we're going to move into our new section of our show, which is for right now called the exploration, which is pretty much, it gives us a chance to really explore the financial market and really expose you guys to much more than just the Forex. We always talk about Forex, but like we said, we want to give you everything that this financial market has to offer. It has options, it has futures, it has stocks, it has ETFs, it has everything. So we want to try to cover as most of that in the most comprehensive way we can in a small period of time, just to expose you guys, so you can never say you didn't learn, or you only learned this. So with that said, we were going to move into an ETF, and I don't know if you guys know what ETF stands for. It stands for Exchange Traded Funds, which means that the funds are traded on the exchange. And I believe that it's kind of like you can trade it just like a Forex or a stock and do it trade it every day. And you can do it multiple times a day. Whereas if you compare it to a mutual fund, a mutual fund is just only a fund you can only trade once a day. So that's kind of really a difference. And I know I don't really trade too much ETFs. But Ty, do you know anything I want to add to tell the people about ETFs?
Yeah, when it comes to ETFs are a great way to really diversify your portfolio. So let me share my screen so I can break that down with you guys a little bit. It's thousands of ETFs out there in the database, but the one I want to focus on today is called XLF. Now, XLF is it's an ETF that tracks the financial services sector. So pretty much all of the banks, all of the financial companies, they're for the most part included within this ETF. Now, ETFs have a very similar pattern of doing things like this, where it gives you exposure to a certain section. So let's say you like a certain part of the market. Let's say you like finance. You like the fact that coming out of the pandemic, banks will probably be making more money because as the economy starts to recover more, people start making more money. Of course, people buy houses, they need loans from the bank, they do business with the bank. Banks make a lot of money based off of these types of transactions. So as the economy gets better, the bank stocks also do more business, stock prices increase. So let's say you wanted to have exposure to that entire sector. Well, it's a few ways you could do that. You could go through and buy all of the best companies, but when you do that, you expose yourself to a lot of single stock risk, because there's all types of different risk in the market. Now, it'll never be a clear-cut 100% way to reduce risk. I mean, reduce risk completely, but you can reduce it a little bit, because when you have a single stock, anything can happen with that stock. Like, let's say for this XLF, one of the stocks in there is JP Morgan, right? So let's just say you bought JP Morgan stock by itself. Okay, it's doing well right now, but what if something unexpected outside of the company financials began to happen? What if the CEO just decided one day, you know what, I'm not feeling this anymore, I'm stepping down? that would cause a sharp decrease in the price of the stock, something that you can't really prepare for. That's called single stock risk. Risk that's applied to only one specific stock. Because him dropping out from the CEO position is not going to affect, maybe Morgan Stanley or Bank of America. It's just going to be that one company. So that's the risk that you face when you buy it by itself. But what you can do in order to protect yourself and diversify is buy the whole sector. Because if you buy the whole sector, it's like having a team. If one player doesn't perform up to par on that specific day, you have a whole team to back him up and still support him and make sure that the team does well. So that's the benefits of having an ETF. Even when things are going bad for one, the benefits and the good fortunes of the others will help bring them up. Now, ETFs tend to go down when the entire sector is on a downswing. So keep that in mind too. It's not just all gravy train to the upside. There will be pullbacks just like anything else. Remember, these things trade just as a stock would trade. You could go in and out, like Darren said, all day long, short. You could go long. You could hedge. You could trade options on it, all of that stuff. So I think, that's one of the benefits that ETFs can have for you. Now, when it comes down to ETFs, you want to make sure you understand what you're looking at. So it's thousands of ETFs that you can cover. So we just want to give you a blueprint on how to break it down, and we want to use that with XLF. So if you guys can see this right here, this is the page for XLF, right? You come here and it'll give you all of the details, all of the information that you need to be privy to. So you have overview, net asset value, assets under management, gross expense ratio. All of those things are available for you. And I think the most important things that you need to know are, of course, performance. You want to see how this thing has been performing over the course of history. Now, in a 5-year period, for the most part, it's been able to produce 16%. In the last year, it's been able to produce around 62%. Year to date, it's been up 23%. So over time, this thing actually performs pretty well. 10 years, we got 12%. So it's a decent play if you're looking for something steady and consistent. And that's what ETFs give you. Don't expect your ETF to just run up and go on a crazy run. Expect it more to be so like something that's slow and steady, something that you want to anchor your portfolio around. So when push comes to shove, you always have safety and you always have something that can make you some type of money. And in order to understand ETFs, the most important thing, of course, is the price and the chart. But secondly, after that, is understanding what's inside of the ETF. Because the name can say one thing and make you think, okay, financial, but what does that exactly mean? You have to break it down and go to this section right here called holdings. Holdings will tell you what companies this entire exchange traded fund owns, how many shares they have, and how large of a percentage that is for the overall portfolio. So they own Berkshire Hathaway. That's their highest weighted asset that they own. JP Morgan, Bank of America, Wells Fargo, Citigroup, Morgan Stanley, Goldman Sachs, BlackRock, Charles Schwab, American Express. And those, I think, are the top 10. Now, of course, you want to get down to the nitty-gritty, you can bring up the whole thing. You can download that Excel sheet, and they'll show you everything. So it's nothing that they hide from you. They're completely transparent. And understanding what companies are in here or any ETF helps you understand the movement of it. Because there are some ETFs out there that have a fancy name on them, but when you go through and look at the companies in there, you say, these companies are trash. It's only, one or two companies that are holding this whole thing up. So that's why you always want to go through and look at what's in it. If all of the companies are good, then it's a solid ETF for you to get in. Because remember, all ETFs are not built the same. I'm not going to say anybody can make an ETF, but nowadays in 2021, it's not that hard to make one and publish one. So there are a lot of trash ones floating out there. So make sure you don't get caught up in that and make sure you stay on top of exactly what's in it by looking at the holdings. And the last thing that you need to take into consideration is this expense ratio. Now, this is different from Forex, from stocks and commodities because they don't charge you to hold it. But because this is an exchange traded fund, it's managed by actual professional portfolio managers. And we live in the United States, the capital of capitalism. Nothing is free. These asset management people and portfolio managers have to get paid, and this is how they do it. So any money that you make, you will be taxed. Well, not taxed, but charged a 0.12% expense ratio. So it's not that much. If you make $1,000, I think you pay out $1.20. So not bad at all. And just make sure you keep note of that, because this could change for multiple different ETFs that you look at. You don't want to get into ones that are charging 5, 6, 7%, because if it only makes 5% a year, they charging you 7%. You can see the issue there. But overall, with ETFs, man, they give you a very, very diversified portfolio, help you get exposure to a lot of sectors without spending a lot of money. And also, one last thing before I go, they can also be a way for you to find a cheaper entry into a stock that you like. Because I know I like stocks like Tesla and stuff, but if you guys remember, before the split, Tesla was at like 2,000 something, 3,000 something a share. And for most normal investors, that's hard to get into. So you could find other ETFs that have a high holding and a high percentage weight in that specific stock. They cost a lot less. You can buy the ETF instead of buying the stock, still get that exposure. So those are the gems I wanted to leave you with in terms of how markets move, how ETFs work, and how they can work for you. And Darren has a little bit that he wants to add on to it and tell you about too. So let's pass it back to him.
Like I said before, I don't really know too much about ETFs. I do know that they were just a little bit, like Tiberius said, that's a little bit more easier or more diversifiable compared to like stocks and even kind of like mutual funds. But don't really hold me to that. And like we said before, there's a whole bunch of them. There's finance, real estate. So if you kind of know something that's going on really high or popular right now, so I know I'm pretty sure like they're talking about how gas prices are going up. So I'm pretty sure like all the ETFs that has gas companies and oil, those are the companies that's going to be up. You people been hearing about real estate. I'm pretty sure a lot of the ETFs of real estate are going to be going up. If you see how gold possibly could be going down, and when gold is going down, that means the dollar is going up. That anything that has anything to do with the dollar could be increasing for the temporary part right now. So that's pretty much my little spiel on ETF. You can trade it just like we said multiple times in a day. That's why it's kind of cool and a little bit better than mutual funds where you can only just trade it once a day. Um, but other than that, man, I think just when you look at this, it's just been making higher highs and higher lows, and you can just kind of really apply the same concept that we do for stock for forex, which is we kind of look at it on a top-down analysis. We kind of recognize patterns and see what it does. So just simply looking here off the daily, we can see that the market has a pattern or had a tendency of hitting the 20 moving average. So if we know that it hits the 20 moving average when it's far away, we can expect the market to come back down to this 20 moving average and even possibly fill in that gap where the wick is right before it continues to go back up. So I think right now we're currently going against the market trend right now when we look at this, just because it looks like we're coming out of a little bit high that we just formed, and the next candle that formed after that was a lower candle down below the open. So yeah, so that's pretty much all I have on ETFs. You have anything else you want to add on that before we move into our favorite section of the show?
Nope, that covers it. That's ETFs for you guys. Make sure you remember all of that stuff. It's very good info. Take that with you.
All right, so there you have it. So we're definitely about to move into my favorite part of the show, which is the best part of the show, which is traders. Matter of fact, I'm definitely going to find some music, and I'm really going to upgrade my sound. So coming soon. Traders Talk. Trader Talks gives us an opportunity to give you the real deal about this trading and what it's like to be an actual trader doing this, making real money, and that it's not all about just making that $1,000 in 5 minutes. It's not about having all these cars and whatever the material things about it. This is really a skill that you generate and can feed your family with if you know what you're doing. A lot of people have the name of Forex all spelled badly just because they possibly could have been taught wrong. And it's not no one else's fault why they got taught wrong and now they think that Forex is a scam. Forex is not a scam. You could just, as long as you know what you're doing and you follow the steps, you can be a consistent trader. We're not going to sit here and say you'll never ever lose a trade, because even some of the best traders lose a trade or have a bad day. But the purpose of this whole thing is to have as less bad days as possible, keeping your losses at a minimal. You keep your winning trades running, and when you follow things like that and put tools and laws set for yourself, you'll be a consistent trader. So, excuse me. The one thing I definitely want to leave with you guys is that I'm definitely excited to expose you guys to more things that the financial market has to offer. I know we spoke briefly about ETFs, but I know we're going to try to find some way to possibly amp it up in some way. But we're definitely going to really dig in and see what other things that the financial market has to offer. We want to cover everything, and maybe even some shows, that part of the section we won't even be going over any charts. It will be just strictly just back and forth dialogue where we're just kind of explaining, maybe show like a page with some notes or something like that. So it's just something for you guys to learn. Obviously, if it has a chart, we're gonna possibly try to bring it up and explain it and break it down. But we want to make it and show you guys that literally, if you learn how to trade well, you can trade anything. And that's why when I say trade well, because I guess I've heard you can trade stock, learn how to trade stock, and learn how to trade everything else. So just each thing has just a little bit more rules, the lingo, the way things are interpreted. But at the end of the day, it's just pretty much, if it has a chart, it's pretty much the same thing: higher highs, higher lows, moving averages. So that's why we really try to stick with a lot of the vocabulary. We really try to push the educational piece, because as long as you have certain things packed down, you'll be able to look at certain charts and be like, oh, I know what that is. Or, you know what, let me just look briefly at these moving averages on a higher time frame and drop down just to make sure. Like, you would know the more and more that you put into this, the better you get. So always remember, once you start, you'll definitely finish great. As long as you stay with it and stay consistent, the work and the money obviously is going to show. So with that said, I know Tiberius has a couple things he wants to say to you guys.
Yeah, so in terms of ETFs, I think, like, just to get back to that point, and in terms of understanding them, like D said, if it has a chart, you can apply the same rules of technical analysis that we use for things like gold, US 30, dollar Swiss, all the pairs that we go over. The same technical analysis principles apply if the chart is present. But like Darren also said, to piggyback off of that, you also need to understand how each one of these markets move, especially if you're trading it on a long-term perspective. If you're trading from day to day, like intraday, day trading and stuff, you really just need to know what news is on tap for that specific day. So you don't really need a deep understanding of the overall picture. But when it comes to trading longer term, like making investments and swing trades, you need to understand the fundamentals of your market, because every market moves a little bit differently. Even though the technical analysis principles are the same, the futures market is a little bit different from the stocks. Stocks are a little bit different from Forex. Forex a little bit different from options, so forth and so on. So every individual asset class has its own specific characteristics that lead to how the prices on the chart actually move. So make sure you understand those things as well, because we teach you the technical analysis part, but that's only half. You got to understand some of the fundamentals, not all of them, if you want to trade long term on like the investing side or on the swing trading side. So make sure you guys keep that in mind, because that is very important for your success.
All right, guys, there you guys have it, man. A long educational piece that we put in there, the exploration. We're definitely going to find a name. We haven't found the name yet, but that's neither here nor there. But I want to thank everybody for pulling up tonight. We appreciate every one of you guys. I swear we love it. Please drop us a message, a DM, an email, anything talking about the trade you took, that you really learned something off of something, or you just wanted to say what up. We definitely would love to interact with our audience out there. You can definitely hit me on my personal IG, which is at I'm the D guy, at IMDGUY. Again, at IMDGUY, or my business IG, which is at Pearl underscore financial underscore LLC. Pearl underscore financial underscore LLC. Drop me a message. Already know my boy Tiberius. You can hit him at.
You guys can follow me on both YouTube and Instagram under the name Ty Trade Futures. Over on IG, I do this series called Trade of the Day where I break down a trade that I took where I either had success or I didn't, but I explain it to you in full. I show you exactly why I got in, where I got in, how, the why, the when, and the what, and what you can learn from it and what I learned from it. And I put all of that in a neat little, little essay for you to read up. So make sure you go check that out when you get a chance. And also follow us on our YouTube page at Bison Trading Show on YouTube because our catalog is growing day by day over there. So make sure you check that out because not only do we have content on Twitch, we also have content on YouTube too. So make sure you get all of that information. Don't miss out on anything.
All right, guys, there you have it, man. So, what's today? Thursday. Tomorrow's what? No, I said today's Thursday. Today is whole Tuesday. Tomorrow's Wednesday, guys. You already know this Thursday. We pulling up same time, same place. Remember those levels. A lot of the levels that we went over, have those in mind. We're definitely going to recap them